As a result of higher than expected inflation, central banks have quickly raised interest rates for mortgages. One of the consequences is that many people can't refinance their mortgages and consolidate their debts. If you find yourself in this position, there may be good news on the horizon and relief may come later this year. Last week, Canada's banking regulator, OSFI, announced there might be changes coming to mortgage stress tests. These changes could reduce mortgage qualifying rates so that borrowers can qualify for a larger mortgage than they can currently. Reducing the stress test would affect purchases and refinance transactions. The timing and likelihood of those changes will be tied to rising interest rates and housing prices. Let's discuss why a reduction in the stress test may be necessary. If an economy has too much unsecured debt accumulation, it can lead to credit bubbles and severe economic outcomes. It's essential to give existing homeowners the flexibility to re-amortize their mortgages and consolidate their debts through a refinance to reduce their monthly payment obligations. The stress test is a policy that was introduced in 2017 to qualify for a mortgage. When a bank qualifies you, they must use a payment based on the contract rate of your mortgage plus 2%, or the Bank of Canada's qualifying rate, the greater of the two. Today, the average contract rate for a 5-year fixed mortgage is around 4.54%. As a result, the stress test would force borrowers to qualify based on the contract rate plus 2% or 654. Today, someone qualifying rate at 654 is 25% higher than the previously stress-tested Bank of Canada qualifying rate of 5.25. That was the qualifying rate as recently as March of this year. As a result of much higher borrowing costs across the economy, we've begun to see significant economic turmoil, including an average 20% reduction in North American stock indexes. The top 200 crypto index is down 59%. Bond funds are typically down around 5 to 8% on the year. Housing prices have seen material decreases in price in many regions, with some showing a 15 to 30% reduction, and inventories having begun building up. This sort of reduction in asset prices will undoubtedly lead to a reduction in the wealth effect. This is a term used to describe people spending more of their income based on their asset fluctuation in value, but eventually that changes as their asset values decline. There's already a lot less buyer demand for housing at today's borrowing cost. Lenders and the Canada Mortgage Housing Corporation have seen a dramatic decrease in the volume of applications for pre-approvals. With the demand reduction, higher interest rates are doing what the central bank intended. The other side of the consideration for central banks and bank regulators are existing homeowners. Household debt to disposable income hit a record level last quarter of 186%. This is above pre-pandemic levels of 181%. What's different is that in 2019, the stress test qualifying rate was 4.79 compared to today's rate of 6.54. That means the qualifying payment on a mortgage has increased by 21%. As a mortgage agent, I have a lot of discussions with homeowners. Many people will benefit from a change in the stress test rate because they'll be able to protect their credit standing and minimize their overall borrowing costs. Change in the stress test will result in more options for existing homeowners to manage their payments instead of listing their properties. I'll keep you updated about these changes if and when OSFI makes an announcement. A change to the stress test and pausing interest rates may be the caveat that rebalances the housing market if prices continue to fall in the short term. Bond yields recently came down 10% from the peak about 2 weeks ago, starting to price in the likelihood of a recession over the next 12 months. This downtrend is mainly due to terrible corporate earnings, rising energy costs in Europe, and other macroeconomic headwinds in Ukraine and China. If you enjoy this content and find it beneficial, I would appreciate it if you could please click the like button, subscribe, and hit the notifications bell to join our finance community and build your knowledge. See you in the next video.